Swing trading versus day trading. Which strategy works best in the cryptocurrency market? Cryptocurrency trading has gained immense popularity, with traders employing various strategies to capitalize on market opportunities. Two commonly used strategies are swing trading and day trading. Both approaches have their merits and suit different trading styles. In this article, we will explore the differences between swing trading and day trading in the cryptocurrency market, as well as the factors to consider when determining which strategy may work best for you. Understanding swing trading. Swing trading is a medium-term trading strategy that aims to capture shorter-term price movements within a broader trend. Swing traders typically hold positions for a few days to weeks, taking advantage of price swings that occur during these periods. They analyze technical indicators, chart patterns, and market trends to identify entry and exit points. Swing trading allows for more flexibility and reduces the need for constant monitoring compared to day trading. Exploring day trading. Day trading, on the other hand, involves the opening and closing of positions within the same trading day. Day traders seek to profit from short-term price fluctuations and capitalize on intraday market volatility. They closely monitor price movements, use technical analysis tools, and often execute multiple trades in a day. Day trading requires active involvement and constant attention to the market. Factors to consider. Time commitment and lifestyle. One crucial aspect to consider when choosing between swing trading and day trading is the time commitment and your lifestyle. Swing trading allows for more flexibility as it requires less screen time and can be suitable for those with other commitments. Day trading, on the other hand, demands more active involvement and a significant amount of time dedicated to monitoring the market. Risk tolerance. Risk tolerance plays a vital role in deciding which strategy aligns with your comfort level. Swing trading, with its longer holding periods, may offer a slightly lower level of risk compared to day trading. Day trading, with its rapid-fire trading approach, exposes traders to more frequent market fluctuations and requires quick decision-making. Assess your risk tolerance and choose the strategy that matches your risk appetite. Market conditions. The cryptocurrency market's inherent volatility fluctuates over time, and different strategies may be more effective depending on market conditions. Swing trading can be advantageous in trending markets, where price movements are more sustained and predictable. Day trading may thrive in highly volatile markets, where intraday price swings offer ample trading opportunities. Consider the prevailing market conditions and adapt your strategy accordingly. Trading personality. Understanding your trading personality can help determine which strategy suits you best. If you prefer a more patient and methodical approach, analyzing longer-term trends and waiting for optimal entry and exit points, swing trading may be a better fit. If you thrive in fast-paced, action-packed environments and enjoy making quick decisions, day trading may be more suitable. Conclusion. Both swing trading and day trading offer unique approaches to cryptocurrency trading, and the best strategy depends on your personal preferences, time commitment, risk tolerance, and market conditions. Swing trading provides flexibility, medium-term profits, and reduced time requirements, while day trading offers the excitement of intraday trading and the potential for quick gains. It is crucial to thoroughly research and practice each strategy, honing your skills and adapting to changing market dynamics. Ultimately, the choice between swing trading and day trading should align with your trading goals, personality, and individual circumstances.